Welcome back to V2U Research. I'm joining you on Monday, May 11th, 2026, for a comprehensive breakdown of what has been a truly pivotal session for the Australian equity market. Today, the S&P ASX 200 faced significant headwinds, and we're going to dissect exactly why that happened, from the technical levels holding the floor to the geopolitical shocks reverberating from Washington and Tehran. The primary driver behind today's 42-point drop was a sharp escalation in global tensions. Markets were rattled after President Trump rejected Tehran's latest peace proposal, sending US equity futures into a tailspin. This rejection has reignited fears of a protracted conflict, impacting everything from energy security to global trade routes. Investors are clearly pricing in a higher risk premium as diplomacy takes a backseat to rhetoric. Technically speaking, the S&P ASX 200 closed at 8,701.80, a decline of 0.49%. Despite this being the second straight day of losses, the long-term structure remains surprisingly resilient. We are still holding comfortably above the critical support zone near 8,283.2. As long as we stay above this floor, the medium-term bullish case remains intact, even if the short-term momentum feels heavy. Looking up, the 9,200.9 level is the line in the sand for the bulls. We need a decisive close above this resistance to signal a genuine breakout. Our proprietary indicators, including the 14-day RSI, are currently sitting at 45.44. This is a neutral reading, suggesting that the market is neither oversold nor overbought. It's a coiled spring, waiting for the next major fundamental catalyst to dictate the direction of the next leg. Adding to the pressure is the domestic landscape. Earlier this week, the Reserve Bank of Australia delivered its third rate hike of the year, bringing the cash rate to 4.35%. Governor and the board are clearly concerned about persistent inflation risks and the secondary price pressures stemming from global uncertainty. For investors, this means the higher for longer narrative isn't just a theory, it's the current reality for the Australian economy. Now, let's look at the sectors. It was a bearish day overall, with 8 out of 11 sectors finishing in the red. However, energy was the clear outperformer, gaining 1.09%. This sector is attempting a recovery after a rough week where it shed over 4.6%. The spike in geopolitical tension often serves as a floor for energy prices, and today we saw traders moving back into the space as a defensive hedge. The biggest drag on the index today was undoubtedly the healthcare sector, which plummeted 6.47%. This massive correction was spearheaded by a staggering 15.9% drop in CSL Limited. When a heavyweight like CSL moves that aggressively, it creates a gravitational pull on the entire index. We're watching closely to see if this is a fundamental re-rating or a temporary liquidity-driven exit by institutional players. Financials and industrials also struggled, losing 0.75% and 0.45% respectively. These sectors are highly sensitive to the RBA's interest rate trajectory. With the cash rate now at 4.35%, the market is recalibrating expectations for credit growth and industrial capital expenditure. It's a cautious environment where every basis point matters for the bottom line of these ASX giants. It wasn't all gloom, however. We saw some spectacular moves in mid-cap space. 4D Medical Limited surged 7.16% and Dyno Nobel Limited rose 6.62%. These companies are demonstrating that even in a macro-heavy tape, individual stock selection and strong company-specific news can still deliver alpha for disciplined investors. These are the kinds of opportunities we highlight here at V2U Research. Looking ahead, the global eyes are on the US. Later this week, we'll see the May data for US existing home sales. This is a critical indicator of economic strength and consumer confidence in the world's largest economy. Given the current geopolitical backdrop, any surprise in the housing data could spark the next major move in equity futures and, by extension, our own ASX 200 opening on Tuesday. As we navigate these volatile waters, remember that technical levels like 8,183 are your best guide. We want to know what you're watching. Is CSL a buy the dip opportunity for you, or are you rotating into energy? Share your stock watch list in the comments below. We love seeing the diverse strategies our V2U research community is employing in this market. If you found today's ASX Market Wrap valuable, please hit that like button and subscribe to the V2U Research channel. Turn on notifications so you never miss our regular updates, technical insights, and educational content. Thank you for trusting our analysis. I'm Sophia, and I'll see you in the next Market Pulse. Happy trading!
The information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.